Hi there, I'm Tom Field. I'm Senior Vice President of Editorial with Information Security Media Group. The topic of this interview is next generation anti-money laundering. My privilege to welcome to the virtual studio David Stewart. He's director with the Security Intelligence Practice Banking with Sas. David, always a pleasure to see you. Thanks so much for spending some time with me today.
Thank you, Tom. Always great to speak with you as well.
David, in the past few years, there's been a fair amount of talk about this next generation AML. So I want to ask you first, how do you define the term and what does it mean for financial institutions and other AML regulated entities?
Yeah, Tom, that's a great question. When we think of next gen AML, really we're referring to a strategy to automate manual processes. It usually is an admission that financial institutions and regulated entities need to shift from rules-based systems to more behavioral decisioning systems. I think one of the things that we've seen with COVID-19 and the pandemic this year, we've seen such a radical shift in consumer behaviors that many financial institutions have come to the realization that static monitoring strategies just don't work, right? And I think some of the how most financial institutions pursue a next-gen strategy is usually through the adoption of things like machine learning, predictive analytics, supervised learning, things like natural language processing, really with the goal of being more accurate. And reducing false positive rates that are pretty much have been the norm in the industry. So that's when I think of next gen AML, that's really what I'm thinking of, is going from rules-based to behavior-based. Now, when you say or ask, what does next gen mean to the industry? I think what it means is that financial institutions rightfully, expect more accurate decisioning. They're expecting to see reduced false positive rates. And I think one of the things that has come out of one of the experiences that institutions that have been early adopters or innovators in next gen practices have seen is, they're able to detect more complex behaviors that are just really difficult for humans to detect at scale. And so I think, in summary, what it means for the industry is that institutions are going to have to raise their skill sets, and they're going to have to think about, from a workforce standpoint, how to marry up, if you will, or blend data science resources along with, their experienced subject matter experts and investigators.
David, a few minutes ago, you mentioned machine learning. Based on your experience and with your clients, what are the key challenges faced by financial institutions that are trying to adopt and implement artificial intelligence, machine learning in their AML programs?
There are many challenges. I think if I were to start at the top, the first challenge would be expectation management, because there are so many there's been so much hype about the expectations of AI and automation and quite a lot of anxiety as well. Will humans cease to be required to do these jobs? So I think from an expectation management standpoint, institutions should not be pursuing these approaches for pure cost takeout, right? And I think they should have clear objectives, understand what the real desired business outcomes and success criteria should be. Early on, a couple of years ago, when we had clients coming to us, they were playing pilot roulette, so to speak. So they were piloting any and all comers that were offering various types of AI approaches to the problem. And we would say, okay, well, if we do this pilot with you, what are the success criteria? And in some cases, they were open enough to say, we just really want to see if AI, has any promise. So I mean, that's an example where you're really just, if you're pursuing this just to say that you're pursuing it, stop, do not pass go. So the first thing would be expectation management. The second thing I would say is know thy data. The data requirements really to experience the kind of lift that you want to see in these techniques, is much greater than what is typically used with rules-based strategies. And so just make sure that you understand the data requirements and and are realistic about the amount of data that's going to be required to get the kinds of results. And I think one thing I've already mentioned is a third challenge is recognizing that you can't replace human intelligence. In a perfect scenario, you want to have a blend of human intelligence along with, automation or artificial intelligence. And then finally, the fourth thing, I think one of the bigger challenges has been taking these more innovative approaches, and how do you take something that's been fairly successful in a pilot or a sandbox and getting it into production. So again, expectation management, knowing your data, understanding that you need human intelligence along with artificial intelligence, and finally, really that last mile, how do you get things from sandbox to production?
So David, if you were really to boil it down, what would you say are the keys to ensuring successful implementations of next-gen AML capabilities? And what advice would you offer to institutions that are thinking that, it's time to undertake such an effort?
I think the keys to success, you'll tell that I'm a little fixated on data, because at any given time, I'm monitoring 20 or 30 projects, and every issue is always, you can map it back to data. So I think number one is do your data homework. And one bit of advice I would have for the AML professionals and financial crimes professionals, reach out to your friends in fraud operations, because they've been doing predictive analytics for quite some time, in many cases, decades, right? And I think the one area that I think the AML industry really needs to do a much better job of is enriching, not just enriching their transactional data that they're used to looking at with, digital fingerprints, device fingerprint, biometrics, the kinds of things that you would typically expect to be looking at if you were doing some type of digital payments fraud detection or prevention, right? So one, again, data homework, but especially with an emphasis towards next gen data, right? And then second would be anything that you do, run it in parallel, generally 3 to 6 months at a minimum, and do exploratory monitoring. Maybe look for some behaviors that don't just do BAU, business as usual to business as usual. Look for some behaviors that may not have been very conducive to rules-based detection, where some of these newer techniques are much better at surfacing context and looking at complex relationships. And again, include your financial intelligence unit resources throughout the process. Take early output, alert output, and share it with your more experienced investigators and go, is this the kind of behavior you want to see? What kind of additional pointers or description do you need to see as an investigator so you understand why you're looking at a certain set of events? And a third would be, again, take a hybrid approach. Don't expect that next gen is like a binary event. It's a gradual, constant, persistent journey of adopting some of these more advanced techniques. And the industry for many years to come will continue to have certain areas where they will cover those risks with traditional rules. And so just set your expectations that it's going to be more of a hybrid approach. Again, data homework, run in parallel, take a hybrid approach.
David, it's a new year. 2021 is ahead of us. What role do you see for AML in trends such as financial crimes convergence or the fraud fusion centers that we're seeing come together at many institutions?
Yeah, that's a great question, Tom. I think one of the things that we saw in 2020, it was already occurring, especially in the US, where you had FinCEN that had published cyber event advisories because of the rash of business email compromises or BEC fraud. But what we've seen more recently with the abuse of various government benefit programs like EIDL or the payroll protection program, and you've seen probably tens of billions of improper payments made to either prison inmates or people that had falsified claims and received money that was ultimately, some of those claims were administered and funds were dispersed through banks, even though they really were not responsible for vetting the recipients, because they were placed under so much pressure to distribute the monies, right? And so I think what we're seeing as a result of that, as the states have subpoenaed financial institutions to say, we think that tens of millions or hundreds of millions of dollars may have been dispersed to fraudsters through your bank. Help us claw back the money. In those situations, if you think about the skill sets required to ferret through all of those events and try to find where the money went, we've seen institutions that have created these kind of virtual fusion center teams consisting of fraud and experienced fraud investigators that know what debit card fraud looks like and know what suspicious ATM activity looks like. And you have money laundering investigators that are really good at piecing together and connecting the dots. And then you have information security professionals as well, who are trying to and help enhance those investigations with the type of device and IP address data that they're very skilled at analyzing. And so I think that's a tactical example of convergence. In emerging markets, what I would consider later adopters to financial crime systems, when they come to us now, they expect a integrated decisioning architecture that can satisfy not just suspicious activity monitoring and reporting, but also various types of fraud detection as well, with a unified case management capability that can support all those investigations. And so I think on the larger institutions, it's been a bit tactical with these fusion centers, but I think in Eastern Europe, parts of Asia, Latin America, in some markets where they're coming in later, and our technologies have gotten better and more mature and more advanced, it's almost table stakes.
David, let's bring it back to Sas. How are you helping your customers to embrace and derive value from next generation AML?
That's a great question. That's all we do every day, Tom. I think we try to educate. We try to educate the industry. Some of the things that we've been discussing as next gen, in reality, we've been doing for over 10 years, even in the AML space, in the fraud space for about 20 years. But I think educating, customers and prospective clients, helping them become comfortable that we have the experience of not just piloting these technologies, but operationalizing them at scale is big. Also, we have a kind of cultural mission at Sas of democratizing analytics. And, ironically, along with that strategy, we're also embracing open source. So we understand that a lot of folks coming right out of university would prefer to deploy models in R or Python. So what we're trying to do is provide user interfaces that allow data scientists to author and deploy and to monitor models more easily, whether they're our proprietary models or open source models. And so that's kind of the embracing AI or next gen AML, if you will, is just educating and embracing different ways of doing it, right? Because one size really doesn't fit all. But at the end of the day, delivering results, especially in the economic climate we're going to be experiencing for the next 12 to 18 months, if not longer, it's delivering real qualitative and quantitative results. I'll give you a couple of examples. One of our very innovative clients, one of my favorite clients, I love those guys. They really know what they're doing. They have a lot of, they do a great job of integrating their data science staff with their FIU, their financial intelligence unit. But they've cut their alert volume in half and all their cash activity monitoring, and they've tripled their SAR conversion rates. And they also would tell you that they're detecting some behaviors that they've never, unearthed before. And so that's one good example. My favorite example, though, is in a trade finance risk project, which the client themselves build as their next gen project, which they've won some awards for, a very large global bank. But they had, if you will, an 8 eyes process. At various times, 4 different associates would review these trade documents. And if it passed through all those checks, then they would go ahead and execute the documents and amendments and issue the letters of credit. We've automated those, what we estimated to be about 200 compliance checks with one model, and has about an 88 to 92% accuracy rate, no fatigue. And the client, what they expect to experience in 2021 is a cost takeout equivalent of about 65 full-time equivalents, which then they can redeploy that staff to more high-value activities, as opposed to just kind of manual, redundant tasks that are prone to error, right? So it's helping educate clients that this stuff is doable. We've done it, and we will deliver results for you. I think is key.
It's impressive. David, thank you so much for your time and insight today.
Thank you, Tom, for having me, and look forward to next time.
Absolutely. Again, the topic has been Next Generation AML. You just heard from David Stewart. He's Director, Security Intelligence Practice and Banking for Sas, for Information Security Media Group. I'm Tom Field. Thanks so much for watching us today.